The much anticipated January WASDE report held some bullish surprises, especially for corn production. USDA lowered corn yield a record 3.8 BPA and production by 324 million bushels. Ending stocks were cut 150 million to 1.55 billion bushels. Soybean production was cut by 35 million and ending stocks were lowered the same amount to 140 million bushels, putting the stocks-to-use ratio at 3%, a 7-year low. And winter wheat seedings were at 32 million acres, up 1.6 million from 2019, mostly hard red winter wheat. Carryout was lowered 26 million and quarterly stocks by 167 million bushels from 2020. Joining us with report analysis is Pat Von Tersch, and the corn number probably the biggest surprise in the report, with USDA pulling down production 325 million bushels. I don't think we saw that coming.
Yeah, significant. 3.8 bushel drop in yield from the November numbers to the final report here in January, down to 172. I look back to 1990, hadn't seen a drop that significant, at least going back that far.
So, Pat, how high do corn prices need to go, especially if South America stays dry?
If we continue to have weather concerns as it relates to Southern Hemisphere growing conditions on top of our challenges, we're going to have to continue to run this thing. We just took corn this week up into some levels that we haven't seen since July of 2013. Actually blew right through it. So prices are going to, could potentially work itself quite a bit higher here in the short run. The market will continue to invert. It's going to have to find quickly that level that gets demand to fit the size of this crop.
Soybean ending stocks were the big thing we were watching in the report, down to 140 million bushels, but I think the market is trading something lower than that, isn't it?
Yeah, there's many analysts are guessing we potentially could drop that ending stocks number down below 100 million, perhaps as much as a reduction of 100 million, from 140 down to 40, below pipeline type levels, and we need to find some levels that will ration demand.
I was going to say, we are not rationing demand at these price levels, so do you think we're going to be at 15 or above on soybeans? Where do we go?
Beans are tough. It's, the demand for beans is so inelastic. It's hard to find that level. I do know from a livestock producer's perspective that as we exit out of the fourth quarter here and work into the first quarter, particularly in the hog complex, we will aggressively start to work weights down, and so we'll start to see some rationing there. So I think the discussion has started, but you're right, Michelle, we haven't seen enough from sales reports on exports or anything to feel comfortable with this idea that we found a price level that's going to work to get demand to fit the size of this crop.
And USDA only lowered ending stocks on wheat slightly by 26 million bushels, but does wheat have to continue to follow corn and soybeans to bid for acres?
Yes, wheat is follower of corn for sure. The wheat market is, their stock situation is a little bit more comfortable today relative to corn and soybeans, but any drop in acreage, which would anywhere on the globe would be quite a challenge for the wheat market. And there's also some issues of some major exporters, particularly the Ukraine region, that are holding back on supply, increasing export taxes. So yes, it's going to have to keep up, especially with that corn complex as we go forward here.
Thanks for your analysis. That is Pat Von Tersch with Professional Ag Marketing.